At the moment, on a daily basis, we're getting asked a question, what should we be buying in 2020? So we're going to break down exactly what you should be focusing on. We're going to talk about things like quality, value investing. We're going to break down all of the rules of investing. We'll talk a little bit about timing as well, talking about the area of the city, the suburbs within that city and the properties within that suburb as well. So there's going to be lots of detailed information. It's one of those podcasts where you're going to want to pull out your pen and your paper and write down some notes because there's some gold in this one.
We're sitting out in the beautiful sunny coast today. For those of you listening, obviously you can't see it, but we are going to be sweating it up in a minute, which is nice for this time of the year.
Oh yeah, we'll have all those dots all over us for the last probably 10-20 minutes of the video. I was down at the beach this morning and I took a little video. It's just absolutely magnificent today. I just love Sunshine Coast in autumn.
Yeah, like we get this period of the year for like literally 6 months where every day is clean. The problem with that is it's only 1 foot in terms of the surf the whole time, but it is beautiful. Same thing, took the longboard out yesterday, Arvo, for sunset and just chilled out.
Oh, it's been amazing. I'm just teaching my partner, Tay, to surf at the moment and she's loving it. It's perfect time to just start learning how to surf at the moment and just little 1 foot rollers.
Lisa had a little operation about a month ago, so she hasn't been allowed in the water, but from like tomorrow she'll be back and I just can't wait to be down there with you guys like 3-4 days a week, just getting the girls to learn to surf. Hopefully Jay comes down a few times as well. So let's talk about fundamentals of investing now. Because the marketplace this year represents such an incredible buying opportunity, you really want to be going for quality. Now, quality means following the simple rules, meaning things we've talked about 100 times before, metro markets, houses, because houses have outperformed units in the last 20 years by 96%. We want the bigger, nice 600 square meter blocks. So while everything's on a bit of a discount at the moment, get the bigger piece of land. We want to be within 20 k's from the city if you can afford to be, or 30 k's from the city if you're just a bit outside of that. We want to be walking distance to the beach if you can afford that. We really want to be looking at your Sydneys, your Melbournes, your Brisbanes and Perths. And obviously later in this podcast, we'll talk about the differences between those markets in terms of timing. And we want to be following quality fundamentals. So suburbs with low vacancy rates, suburbs without heaps of vacant land or land that people can develop on, suburbs with good, solid, healthy DSR scores between 55 and 70%, which is sort of that buying opportunity, and suburbs with a healthy vendor discount where properties, even though it's a slower market, are still moving because there's first-time buyers, there's investors, and there's owner-occupiers that want to live there long-term because of the location benefit.
We've been talking about quality or value investing since we've started the business. We've never been people to focus on things that are cheap. We're always looking at things that represent value to us. And what represents value to us is something that's performed better than the average in the past.
Yeah.
So it's not about necessarily trying to buy the cheapest property or trying to buy the most expensive property either. It's about looking at the information that you have at any given time and making an educated decision to get into an asset that you're hopefully setting yourself up to achieve the best results over the longer period of time. So all of these little things matter because they're going to compound over time and ideally set you up to get a great return. Just talking about some of those things that Ben's mentioned briefly, being in a major metro market, we know that they've outperformed regional markets over the last 20 years in Australia. So that's a very simple thing to start focusing on. Focusing on houses over units. Once again, we know that they've outperformed units over the last 25 years. So we focus on houses. These are really, really simple things to do to hopefully set yourself up to get a better return over the longer period of time.
I love that, man, because if you just follow those two simple rules, you know, you'll be 90% better off than every other investor in Australia who doesn't follow them. Like, I know if you're living in a regional market right now, I know if you've got a smaller budget, you might be sucked towards that place that you feel comfortable with. You might be sucked towards that cheaper unit, or you might be sucked towards like the glitz and glamour of like something brand new, like a townhouse or a unit off the plan. But by not following these fundamentals, you're going to cost your future self so much. And my wife and I were talking about this last week. Just every decision that we're making today is in alignment with enjoying this moment, but also keeping an eye on the future and making sure that if I'm only going to buy a few more properties in my entire lifetime, then I want to absolutely knock them out of the park and buy the right stuff following these super simple rules.
We've been talking about this week actually because our partner and colleague Adam, he's just about to buy a house up here on the Sunshine Coast for him and his partner to move into. And he's been looking at all of these different ideas and different properties because he's got a decent budget there. But once we start breaking it down and talking about Ben's experience in the past, you just can't sacrifice these things like land size, like house size, like positioning within the suburb, because you're just sacrificing so much longer term, because these things can drag you through the mud over time if you are in a bad pocket of the suburb, or if you are on a slightly smaller piece of land, or if the house that you've bought is only 180 to 100 square meters, you just don't have much to work with. So looking at identifying those areas, where are the owner occupiers, where are the families within this suburb, and how can I get a great property or a subpar property in one of these areas?
You know, it's not just going, I'm going to buy Melbourne this year and anything that I buy is going to be equal long term. You know, long term prices in Melbourne have gone absolutely through the roof, like they have in Brisbane, Perth, and Sydney. And so what we're saying is, instead of rushing in and just buying something because that's what everyone around you plus your gut is telling you to do.
That's what was happening toward the end of for the last sort of 6 to 9 months in Melbourne and Sydney and parts of Brisbane as well. There's just crazy amount of people at the open for inspections, lots of offers, auctions going well and truly over the desired price, and it really hurts your emotion. Like as an owner occupier, those things really play on your emotions, and you just don't want to miss out. You get that FOMO.
You get that recency bias that short-term gain is going to continue, like a lot of people had late last year, and all the other types of biases that Tony Robbins talks about in his book Money Master the Game. Now, if you're buying Melbourne this year, like, I want you to just take a step back for a moment, for example, or Sydney or Brisbane or wherever else in Australia, and look for the best pocket of the city. Now, we all know that in Sydney, the northern beaches, the eastern beaches, the city centre and the southern beaches are where the high income earners are, where the owner occupiers are, and where the long-term value is. We know in Melbourne that the city centre and East Melbourne, as well as close to the city, is where the long-term value is. In Brisbane, we know that it's the eastern beaches, the city centre, as well as the northern beaches. And then in Perth, it's basically anywhere within 5 to 7 Ks of the city, or anywhere along that stretch of water within sort of 15 to 20 Ks up and down the coast. And if you follow those fundamentals of buying the right pocket, not just buying Perth, for example, you will do exponentially better over time. And then once you've nailed the pocket, let's say northern beaches of Perth, you really want to look at every single suburb across the key indicators that we've talked about in previous vids and nail the best suburb. And then once you've got that suburb, you want to nail the best position, the best streets, the biggest land sizes, the nicest land sizes with the best orientation, and those fundamentals that would matter to you if you were putting your family in that place for the next 30 years.
You find a lot of common things in these sorts of areas as well, where the quality people are living. They've generally got nice amenities. They've generally got like a good cafe or restaurant culture. They've generally got some sort of shopping precincts. They more often than not have good school districts, good primary schools, good high schools. They've always got train stations and good public transport options for a lot of people. There's generally some sort of infrastructure expansion occurring in these areas as well. So you can just think about the suburb that you grew up in, or the area that you grew up in, and you can kind of map this out and go, okay, well, where are the good schools? What's the sort of demographics that live around that? Is there train stations? Is there good access? And if there isn't a train station, you know that more often than not, it's not generally the nicest spot.
I didn't think too much on train stations until I thought about Sydney today. So growing up in Sydney, it was handy that I could jump on the train after school and go surfing, or on the weekend I could jump on the train. Like, that was super helpful. But it wasn't until Sydney got to 5 million people, they didn't improve the road network in terms of some of the major points, like getting from Bondi to the city, getting from Cronulla to the city, going from the northern beaches to the city. They just haven't improved the infrastructure in 20 years. Like, There's some great infrastructure going west now, like 6-7 lanes each way, but you get none of that in the good pockets. And so as the city's grown to 5 million people and a lot of people want to live carless, those suburbs with great infrastructure have performed significantly better than those that don't. I was watching $1 Million Listing New York, like my favorite show in the world, recently, and I was looking and listening to them from my perspective, and the suburbs with train stations in New York. Now, I don't know how big New York is these days or how many people live there, but it's the same with, Tokyo or something like that. The places with transport, now that Tokyo's like 30 million people and New York's whatever it is, are worth millions, literally millions of dollars more than the suburbs further away from the city that don't have that access to transport. And people are making decisions based on, does this have a suburb and a train station walking distance from where I want to live or not? And Sydney in 25, 30 years will be 10 million people. So will Melbourne. Brisbane will be 5 million people. Think about that in mind as you buy today.
Exactly. Now, once you've identified these sorts of pockets of certain cities that you want to be investing in, and you've got to that suburb level, you can really get very detailed to understand where these areas are, because a lot of people are interstate investors and don't actually have the opportunity to drive through these suburbs, go to open for inspections every single day, because you want to try and get into the right markets at the right time. You may not have that luxury. So something that we've done for a number of years now is you'll print out a map of the suburb, and you jump onto realestate.com. We use CoreLogic, but you can use realestate.com sales history. And on that sales history, you can map out exactly how much the properties have sold for in that particular suburb. So you can maybe look at the median and give yourselves, $40,000 north, $40,000 south of that median house price, and that's sort of your middle ring. And then that would be one color. Let's call that red. Now, the properties that are cheaper than that median house price, than $40,000 below, indicates it's a lower quality property in that particular suburb, and you do that a different color, maybe a green. And then you also look at the other side, the more expensive properties that are a higher premium for that particular suburb, and you might put that a blue. And if you do this for over 12 months, you're going to have about 100 to 200 dots in that particular suburb, and you can literally see where the good pockets are and where the crappy pockets are in a suburb.
I love that. Like, I remember the first time I did this for myself about 5 or 6 years ago, I went, holy shit, like I've just identified the middle and the premium bands or pockets of an area. And as an investor, I know that by investing in those higher quality areas, I'll do so much better. And you know what I'm talking about. Like, if your parents bought a property back in the day in a cheaper pocket of a suburb, and now the suburb's worth $1 million in Sydney or Melbourne, but it's still the cheaper pocket, versus, your friend's parents or your parents have bought the quality area, and just how much better that's done over time. So what I know is that quality investing and value investing will always result in better returns longer term. There always could be a short-term spike in the cheap shit because that's what people can afford. But longer term, it all balances out, and good stuff ends up significantly better off than worse stuff.
Now, we understand that units perform really well at some periods of time of the cycle. We know regional markets perform well at some periods of the cycle, but we don't create our strategies. We don't create our plans based on a 5 or 10-year plan even. What we're looking at is a 15 to 20-year journey, and how can I be in the best possible opportunity or property or market over that period of time. So sticking to these rules of investing, sticking to these fundamentals that we find so important, sticking to value investing and focusing on quality properties, we can just see the data and it supports these types of properties. And I just don't want to leave that potential growth on the table. Like, if I can maybe get it, I want to definitely get it.
Without a doubt. Like, I know it might sound a bit, over the top, the way that we describe some of these things, but let's talk about it in financial terms for a sec. So let's say that you go out and buy a $400,000 property anywhere in Australia today, and you buy a unit, you buy it in a regional market, or you just, don't follow some of these rules. Now, that $400,000 investment might grow by 4% a year for the next 15 years. If you had followed these fundamentals and got a 6% gain per year for the next 15 years, on $400K, The difference in the value of going to better quality asset would be 235K. Now imagine you had $1 million and you invested that $1 million in 1 or 2 houses and only got 4% versus 6, compounded per year for the next 15 years. The difference on $1 million is over $600,000 or thereabouts.
It's just big bucks.
What if you've got $2 million, $3 million, $4 million on the table? Now, if you honestly care about your long-term position and financial freedom and making the best decisions for your kids, as soon as I found these rules and put them into a document for my own investing, I'll just never break them again. It is that simple, because the way that I see it is, if I've got to go to work for an extra 5 years because I'm not following these rules, when my children are young and I'm trading that time away from them, when I could have just followed some simple rules, had a good plan and a great strategy in place, and got 5 years of my working life back in the future, like, that is why I do this stuff. It all comes back to, by following these rules, I get financial freedom sooner. By getting financial freedom sooner, we get choices, the choices to work less or work more, to start businesses, to work with great people, to train more, to spend more time with our families, to drop the kids to school when you can actually do that again, to eat organic food, to look after ourselves, to make decisions in line with our values. And that's what all of this is about. We don't, do this stuff for you guys just to be like, pointing fingers or to be like judgy or to have anything to do with what you've done to this date. We just want to make better decisions moving forward in the future so that you can have a better life. And by you having a better life and making better decisions, everything changes for the positive.
We've figured this out from doing our research, from looking at the data, and from experience yourself. Like, Ben's bought units, he's bought regional towns, and guess what? They were the worst investments that you bought.
Yeah.
But you've also bought quality staff, walking distance to the beaches, close to the CBD, and it's performed extremely well. That on top of the $300+ million of property that you bought for clients. But this is stuff that's been personally tried and tested from Ben, and it's the data that we've looked at over years and years and years and years in the past to try and figure out this sort of stuff. Because same as you, like, if I can achieve financial freedom 5 years, 10 years earlier than I would have if I didn't follow these rules, that's 10 years that I get of my life back.
For sure. So, we wish you all the best in this year. Please go for quality. If you can't afford quality now, then just save or increase your income when you get the chance to, and wait. Sometimes it's better to do nothing than it is to go rushing in and buying the wrong thing. For those of you in a great financial position, like almost everyone that we speak to, please jump over to www.pumpedonproperty.com, book in a strategy session with myself or Simon. Let's talk about exactly where you are, what your goals are for this year, and what your goals are long term. Let's openly talk about what's been holding you back, and let's talk about getting a plan in place for the ideal next property. Now, a lot of people are worried about us trying to sell them something on those sessions, which I completely get. But these sessions are about us giving back. And some of those people obviously choose to work with us, but a lot of those people just get really good value. They go and buy their local hometown or metro marketplace, and they've got a really good idea of what to do next and a focus to start from. So wherever you're at, whether you're looking for some support or looking to smash it on your own, book in one of those sessions. We'd love to help educate you. We'd love to help you make better decisions this year. And hopefully for some of you, we'd love to be starting a 15-year relationship where we go from where you are to financial freedom and do a lot of the hard work in the next 5 years to set it up so that you've got a life that you can feel confident about, that you can feel grateful for again, and you're moving towards who you're truly supposed to be.
Good luck investing.